If you're getting ready to buy a home, it's exciting to jump a few steps ahead and think about moving in and making it your own. But before you get too far down the emotional path, there are some key things to keep in mind after you apply for your mortgage and before you close. Here's a list of things to remember when you apply for your home loan. Number one, please don't deposit large sums of money without speaking to your lender. Lenders need to source your money, and cash isn't easily traceable. Before you deposit any cash into your accounts, discuss the proper way to document your transaction with your loan officer. Number two, don't make any large purchases with credit. It's not just home-related purchases that could disqualify you from your loan. Any large purchases with credit could be a red flag for the lender. And you don't want to make any purchases that would change your debt-to-income ratio in the wrong direction. So resist the temptation to make any large purchases, even for furniture or appliances, especially when you're paying for those with credit. Number three, don't co-sign for loans for anyone. When you co-sign for a loan, you're making yourself accountable for the loan's success and repayment. And with that obligation comes a higher debt-to-income ratio as well. Even if you promise you won't be the one making the payments, your lender will have to count them against you. Number four, don't switch bank accounts. Lenders need to source and track your assets. That task is so much more easier when there's consistency among your bank accounts. Before you transfer any money, make sure you speak with your loan officer. Number five, don't apply for new credit. I kind of touched on that earlier. It doesn't matter whether it's a credit card or a new car. When your credit report is run by organizations in multiple financial channels, mortgage, credit, car, auto, it will have an impact on your FICO score. And the lower credit score can determine your interest rate and possibly even your eligibility for loan approval. Number six, don't close any accounts. Many buyers believe in having less credit makes them less risky and more likely to be approved. This isn't true. A major component of your score is length and depth of your credit history, as opposed to just your payment history, and your total usage of credit as a percentage of available credit. Closing accounts has a negative impact on both parts of your score, so don't do it. Number seven, do discuss changes with your lender. Be upfront about any changes that occur. Things like changing your job or going to a new employer. You want to make sure that you are discussing that with your lender so that you're not doing something that would negatively impact your credit approval. So ultimately, it's best to just discuss all of these decisions with your loan officer before you do anything of a finance. The bottom line is you want your home purchase to go as smoothly as possible. Remember, before you make any large purchases or move money around or make major life changes, be sure to consult your lender, someone who's qualified to explain how your financial decisions may impact your loan. You can definitely discuss this with your realtor, but only your lender will know how it will affect your financial situation. This is Rolanda Pullen Daniel, a realtor with Coldwell Banker in Chattanooga and Northwest Georgia. I appreciate you watching.